for another weekly trading recap. Road to Six Figures, Episode 2. And if it's your first time tuning in, this is my YouTube channel I started this year, where I'm documenting my journey to making six figures in 2022 through trading. All right, so this is a weekly recap, right? So this weekly recap, we're gonna go over this past week, what we did well, what we didn't do well, what we got to work on, so we can grow, so we can improve, so we can touch that six figures. All right, so as you can see, this was a short week. So it's the first week of 2023. Now, what happened in this first week of 2023 was I got a late start to the week. I didn't start trading until like Thursday morning London session. That's because it was the holidays and everything. I wasn't, spending time with family. And then, like, I don't like to come into a new week and start trading unless I have broken down the previous week, because I don't want to keep repeating the same mistakes over and over and over. So if I haven't broken down the previous week, I'm not going to start trading that new week until I've done that, right? So I can really see what's going on, right? So as you can see, I deposited $24 on the 5th. So this is the 1st through the 6th, so the 5th. So first trade -10, +7, -2, -8, -4. So I didn't blow my account. My account had like an $8 balance, but I definitely did make some mistakes that I've made in the past. So let's go ahead and break it down, right? So first trade. So like I said, this is Thursday morning London session. So mind you, this week price is freaking bleeding. So Monday, Tuesday, Wednesday, price is bleeding, 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 bleeding. Like I said, I don't have the time to break down everything, so I'm not just trying to hop in. So what I'm looking for is I'm looking for price to slow down and start breaking some swing highs in the opposite direction. So some intermediate highs, aka king highs, right? So as you can see, as we drop in, we're dropping. So mind you, we're just prior to this, this whole week, we're just dropping. So this is the 3rd, right? January 3rd. So it's just dropping. So I'm trying to find a place to get in. So finally, price comes down, and then you see this swing high right here. So price comes down. This is the high that created the low. So I'm waiting for this to get broken, which is like a change of character, so I can look for potential longs. So price comes down, it breaks structure, comes back down. Now, mind you, I'm looking at this as it's happening. I didn't take this trade. Price comes down and runs up, right? And I actually missed that trade because I was looking for 2 breaks of structure, right? So I missed this trade, but I was actually looking at it and price just freaking shot up. So boom, it breaks structure once. We have a second break of structure. Now I'm looking to get in. We have this order block right here. So price comes down, and then it forms a gap, a fair value gap right here. Boom. And this is where I get in at. And it has an order block right here. I get in here. I hold. So after it comes here, after it comes through the fair value gap, I'm like, all right, cool. It might come to the order block. Comes to order block, boom. Stops me out. I lose $10 the first trade, and I lose momentum. And I really have to work on risk management. Like the past 3-4 weeks, the first trade of the week has been a big loss, and it's pretty much setting, like, it's sucking the life out of me, and it's making me like get off to a bad start, and it's just like an uphill battle from there. So I really have to work on risk management. I think I'm gonna focus on nothing but risk management. That's gonna be my priority this week, is risk management, because like I shouldn't be with my $20 account. Like I'm looking to risk like $3 per trade, right? So that gives me like 6 trades, right? 5-6 trades. So if I'm losing $10 on one trade on a $20 account, like that's half my account. I should be risking $2-3. You get what I'm saying? So I mean, I think like my max is like $3. It should be really be like $2, but like $3 max. And then I'm just like, bro, it's not going. So boom, mind you, price stops me out. Bad risk management. I should have waited for price to come down here, but it also had a lot of liquidity. It had a liquidity under this OB, and it had liquidity under here. And on top of that, I entered at like 9 o'clock, which is not an ideal time, right? It's right before New York opens, so I really should wait after the 9:30 open and start looking for trades starting at like 9:45, right? That 9 o'clock like is wonky. Like a lot can go on um during that time. So that was trade one. It's at like 9 o'clock bet. So after that, we get another boom. So I took that L. So if we go down here, we have things I need to work on. So that was risk management, and that was risk management, right? Obviously, FOMO, because I'm afraid I entering at a fair value gap because I'm afraid that price is not gonna reach my order block. But my mentality is that if I get an entry at a order block, it's gonna give me a higher risk to reward, right? I can't be afraid of fear of missing out. If it hits a fair value gap and runs, it hits the fair value gaps and runs. I find another trade. It is better to not make money than it is to lose money. If I miss out on a trade, I can always find another trade. If I lose the trade and lose money, then it's gonna set me back. So I have to get into that abundance mindset. Like, bro, it's unlimited trade. Like the market's always moving. It's pairs. Like it's always moving, bro. Like it's gonna be another trade. Stop being fearful that you're gonna miss out on a move. Bet. Plus his liquidity. It comes down as you can imagine. Grabs the liquidity, and then I find another entry. So after it grabs the liquidity, we see another swing high broken, which is right here. Boom. Not only is this swing high broken, it is broken with momentum and it creates a fair value gap. I enter on this fair value gap. I put my stops below here, and then we ride this bad boy up. Now, I was up $14, which is 140 pips on oil, but I did not close. I told myself, bro, like if I'm able to get this account to $30 and be profitable for the day, I'm gonna take it and I'm not gonna trade for the rest of the day, and I'm gonna come back tomorrow. I'm up $14. I see $30 on my account. I do not close. Why do I not close? Because I see this pool of liquidity right up here. And I'm like, oh yeah, price is about to grab that. But what I also did is I'm like, bro, I didn't let green trades turn red too many times, and I'm not gonna let that happen again. So what happened here is on the M1, price formed this little demand zone right here, right? Shot up, formed this gap. It comes back into this demand zone and leaves. So my thought process is I'm not gonna let, if price comes back below here, it's really invalid. And I want to, so I trailed my stop. Long story short, I trailed my stop below here, and look what price did. It came and stopped me out, and then it ran to exactly to grab this liquidity where I thought it was gonna run. So what I didn't notice though is on the M5. If you see this M5 right here, boom, it's another demand zone that shot up here. And what price did is it tapped into this M5 demand zone and actually ran up. So I mean, honestly, with that one, my issue would have been greed. You know what I'm saying? My issue is greed because I didn't take the profit when I was supposed to take the profit. But I really can't be mad. I did well on my risk management because like I didn't give all that money back. So I really can't be mad at my risk management. It was more of a greed thing at that point, right? So that's trade two. So trade two, as you can see, that's the $7.62. So trade three comes, right? So trade three comes, and trade three is like a continuation, right? I see structure broke here. I see this little demand zone, or what I call a demand zone right here. And then when price comes in, I enter a position here. And as you can see, that did not hold, and I got stopped out. Good risk management. You know what I'm saying? It's only $2.78. But fair value gap below, I didn't even notice before placing trade because I was waiting on price to get a better entry. So that's like kind of like another, not really. I don't think I really noticed it. Yeah, I said fair value gap below that I didn't even notice, right? So this is more like market structure, really seeing what is going on, right? So I would say market structure, identifying liquidity, identifying fair value gaps, right? So market structure comes. Um, so I enter here, I get stopped out. But what I didn't notice was that there was a fair value gap right here, right? And then there's like this, now I wouldn't call this OB, but it's a fair value gap right here, right? So it breaks this with momentum. Boom, we go into the upside. I could have actually placed an entry here with my stops below here and then rode this up. But what actually happened, oh, this is what happened. This is not my -2 trade. This is my, wait, what is this? Okay. No, this is the trade. It's trade 3. Yep, trade 3. All right, so what happened? This is what happened in trade 3. This is not good. What happened with trade 3 is I entered here. I didn't set a stop loss. Well, I did set a stop loss, but I set my stop loss way down here. Price comes all the way back up. This was like end of New York, I want to say. Yeah, I got an end of New York. I held this all through Asia. I'm way up here. I went from -3. No, I was down like $4 or $5. I went to +$3. I looked at the account. I thought about closing, but I didn't. Why didn't I close? I don't know. I'm thinking price is gonna come take this. I don't know why I didn't close. Even if I didn't close, I should have stepped my stop to break even. Price comes all the way back down and stops me out, and I go to -8 from +3 to -8 on that trade. Terrible. So then I come back for another trade. There were gaps and OBs that I didn't notice. Um, could I have waited on price to get there? A better entry, plan out trade. There were gaps and OBs that I didn't identify before making a trade. Risk management was at work when price dropped. With good risk management and no greed. All right. So bet. So we have that trade, right? So last but not least, we got to come back to that. I had a bullish bias, so I was looking for longs. Was looking to play reversal, break for king high. Pros broke 2 kings high is the first one with momentum, so I marked that off as the demand zone to enter. Where price came back to the zone, but it didn't hold. Let me see what I got here. All right, so I'm looking for another reversal because price worked the reversal here. I'm looking for long, so I'm looking for a place to actually get in here, right? So this is what I'm looking for. So I'm over here. So price is coming down. Price creates, I think I was on the M1. So I'm looking for longs, right? I get an entry. Okay, so price is falling, 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 falling. Let's see what I wrote. Had a bullish bias, so I was looking for longs, right? Price broke 2 kings high. The first one with momentum, so I marked that off as a demand zone and into where price came back, but it didn't hold. All right, so, dang, this is too much. Let me see. So price is coming down. Price broke here, so I marked this area off right here, but that didn't hold, right? So you see what this yellow box is? That was my first entry. That one didn't hold back. So we get stopped out there. Saw a strong exhaustion candle and saw price could reverse to the upside and I entered. It was around 4 a.m. so I went to sleep. When I woke up, saw price did a stop run and then ran in my direction 200 pips. Oh my Jesus. Oh Lord. Oh Lord. All right, so My stop loss wasn't there because if it was there, I wouldn't have got stopped out. But basically, after this one, I saw some exhaustion candles and re-entered. Where did I re-enter? Um, I had to have put my stop under here. Yeah, I think I put my stop underneath. Yeah, because this was my entry. My first entry closed that. I think my okay. So that was my first entry. So we at 4 in the morning. So boom, nah, because so price. Ah, oh yeah, 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 yeah. Here we go. Here we go. Here we go. Price. All right, bet. So I see it grab this liquidity. So I put my stop under here. I see price grab liquidity. Boom. Some exhaustion. I enter. I'm up like freaking. So this was overnight. I'm up like 80 pips, bro. And then price comes, stops me out, and ran 200. So I mean, in this one, so the same thing happened. I'm looking for a reversal, liquidity grab, stops me out, and then um yeah, I went to sleep. I didn't set a TP. So if I go to sleep, bro, I have to set a TP. Um so I mean, honestly, with that, I mean, I would have been up. So mind you, I could have had a very profitable week if I wasn't greedy and let that red trade turn green. If I said it take profit here, um, you know what I'm saying, I could have got like an easy 1 to 3, bro. Like easy, like 1 to 3, 1 to 4. Like boom, let me take that. So if I see something overnight London, set a 1 to 3 or 1 to 4. You know what I'm saying, and then yeah, so I mean, overall, not a bad week. I think this week I'm gonna focus on risk management. If I did risk management, like I said, you're not gonna win every trade, but even like with this one, when I get stopped out and I'm up, I got that. This one I would got stopped out and would have been up, taking profit, not being greedy. So I think risk management is what I'm gonna focus on this week. Risk management, risk management, risk management, risk management, risk management. And what was working was, kind of those like reversals, really, like reversals, like seeing the break of a king high, and taking it in the other direction. So that sums up this week. It's about to be New York Open in about 15 minutes. So I will check y'all out in episode 3. Peace.